Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's see what the Asian markets and the global markets have put out for us. Most of the US markets ended with a positive bias. Europe ended positive, and we are having a positive Q as far as the Asian markets is concerned. The SGX Nifty is also indicating a pretty flat start as of now. It's just up 4 points, but there's still almost an hour to go for the markets to open, so that could probably change by that time. How did the ADRs pan out in trade? You saw counters like Vedanta move up in trade. The others also did well for itself. Tata Motors was the only one that was ending down in trade. That was down almost 2% in trade. Now the Nifty was flat in trade. The Nifty was up, was flat in trade, but there was selling pressure that was seen on the mid cap and small cap end of the market. Main selling was coming in as far as the PSU banking space was concerned, so that was down almost 2%. Two sectors which did well in trade today were yesterday were the media and metal pack, up over 1% in trade. Now as far as this week is concerned, metals have been doing well, and they will continue to do well as the metal prices globally are doing well. Media and auto were the other two sectors which did well in trade. On the losing end, you had counters from the FMCG pack, Pharma pack, and the real estate pack, which didn't do well this week. As far as this month is concerned, PS metals, media, and pharma are the sectors which did well in trade. And what hasn't done well is the MNC, auto, and real estate indices, which haven't not done well. As far as stocks in the fresh 52-week high is concerned, the list is much wider, but we've taken a few stocks which continue to do well. So counters like Havells, AI Engineering, Pata, Sanofi, and Intellect Designs were trading at record highs in trade yesterday. As far as the flows are concerned, FIs were net buyers to the tune of 315 crores. DIs sold in almost 320 crores. So for the month itself, FIs still have been sellers, and DIs are minuscule buyers in the market for this month. As far as the contribution is concerned, HDFC Bank was the main contributor. Maruti contributed, but some of the banks like SBI and ICICI Bank added on the negative side for the Nifty. As far as the F&O markets is concerned, fresh buying was seen on the Nifty on decent open interest build-up. The Nifty open interest, the Bank Nifty open interest build-up was much higher at 3%. It ended flat in trade. Now, as far as the open interest build-up is concerned, you're seeing that there is resistance that's coming in at the 11,500 level. That is where call writers are active. Put writers are active at lower levels. Even if you saw what happened in trade yesterday, it was the call writers at the 11,500 and 600 which are writing, indicating that they don't want the market to go beyond the 11,500 mark in trade. As far as stocks in the F&O band is concerned, you have Adani Power, Adani Enterprises, which are in the F&O band, Jet Airways, and PNB. PNB is the new entrant that came into the F&O band. As far as the PCR is concerned, the Nifty PCR was stable. The Nifty Bank PCR also not moving too much. It moved down from 1.50 to 1.37. Three stocks that I want to highlight. First of all is Torrent Pharma. Stock trading at record highs, decent numbers, high open interest build up. The traction probably will continue. NMDC numbers today, high open interest build up yesterday. Iron ore prices rising, so probably the traction is there in the side of NMDC. And finally, you have Adani Ports with fresh shorts. Open interest build-up was 18%, that too on the short side, post the numbers. But this is what we saw as far as the domestic news were concerned. Let's go across to Rosalind Chin for all the top international headlines.
The Trump administration says it intends to reimpose sanctions on the Iranian oil industry in November and is considering further penalties after that. National Security Advisor John Bolton told Fox that any potential waivers will be, quote, few and far between. The renewed sanctions are already having an effect. Daimler is freezing operations in Iran, including a tie-up with the automaker Khodro. Speculation is rising that Turkey will need capital controls and a bailout from the IMF as the lira reels from Monday's plunge. The currency remains vulnerable as officials head to Washington for talks about a jailed American pastor and the sanctions imposed in response. However, there's been nothing from the government and the central bank, and investors fear President Erdogan is blocking a rate rise. Tesla shares and bonds soared after Elon Musk said he's considering taking the company private. The initial announcement came via Twitter, mentioning a share price of $420 and saying, quote, funding secured. That would value Tesla at about $82 billion. However, the share price failed to reach $420, indicating market skepticism that Musk can pull off what would be the largest leverage buyout in history. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rosalind Chin. This is Bloomberg.
It is certainly a bombshell, and that $420 a share would translate to $72 billion. That's a lot of money, a lot of backing that he would need to do that. But you know, you should never underestimate Elon Musk.
So, Keith, what would it take for Tesla to go private at this juncture?
Yeah, well, it would be the $72 billion, which is an awful lot of money. But, you know, he's pulled rabbits out of hats before. It did seem like he was trying to counter the FT report about the Saudi investment in Tesla. You know, sentiment has really changed on Tesla over the past week since earnings. They had kind of better news on their cash burn and better news on the Model 3 production. And since then, investors have really warmed up to Tesla again.
Why would he take it public at $420 a share? Keith, is that the premium that shareholders would want?
Well, it's hard to know just yet, but I mean, he would like to take it private so he doesn't have to deal with all these pesky shorts that have always annoyed him. He doesn't like all the critics out there, and if he could do this as a private company, I think he would prefer to operate that way.
Well, amongst the stocks that we're tracking today includes Patel Engineering, which is won orders worth 2,400 crores, so watch out for that name. As also IIFL Holdings. Now, this is on the back of an ET report which says that IIFL Wealth may buy Chennai-based wealth advisors, where the promoters are looking to offload as much as 80% stake, so watch out for that stock. We also had a very strong set of numbers being reported by SRF Limited. Revenue growth of 34%, net profit growth of 29%. More importantly, it was a very good performance as far as the margins are concerned, which bumped up by 350 basis points to 18.8%. Next on the list is GSK Consumer, where we saw revenue growth of 12%, a net profit growth of a very strong 51%. And even if you look at the operational performance, the margins expanded by nearly 400 basis points to 20.8%. Next on the list that we have is Inox Wind, where the company reported a net profit of 10 crores as compared to a loss of 39 crores in the previous quarter, and that was supported by a strong growth in its revenue numbers. In fact, the EBITDA at the operational level also, they reported a profit this time around. We have Edelweiss Financial, where the company reported a revenue growth of about 17%. Net profit growth came in at a much stronger 31%. Emphasis is another stock that we are watching out for. While they reported numbers which were more or less in line with estimates, and net profit came in at about 8.7% higher. More importantly, the board has approved a buyback of shares, and the buyback price has been fixed at 1350. So probably the stock will react more to this development. And finally, Thomas Cook, which reported a very weak set of earnings. While the revenues saw a sharp 27% decline, the net profit grew by 6%. That was largely on account of a lower tax outgo. But even if you look at the operational performance, EBITDA is down by 50%, and the margins have come off to as much as low as 4%.
Two oil marketing companies will be reporting its numbers today, HPCL and BPCL. Now, if you see the headline numbers for HPCL, now though the revenue is expected to be higher by close to 17%, the net profit of the company is expected to decline by close to 17% to 1,400 crore rupees. The EBITDA is also expected to decline by close to 12%, while the margins are expected to contract to 3.6%. For BPCL, the revenue is expected to be higher by 16% to close to 75,500 crore rupees, while the net profit is expected to decline by 23%. EBITDA is expected to decline by 11%, while the EBITDA margins are expected to contract to 4.4% in the first quarter of financial year 2019. Now, this is expected to be a weak quarter for both the oil marketing companies because of the weak core performance. Now, however, inventory gains could be the surprise factor in the first quarter of financial year 2019. Now, the refining business is expected to be subdued because of the flat crude throughput and weaker gross refining margins. But as crude averaged around $75 per barrel versus $67 per barrel in the fourth quarter, inventory gains is something that could boost the gross refining margins for both the oil marketing companies. Now, on the marketing side, the sales volumes are expected to be higher for both the oil marketing companies compared to last quarter. However, due to weaker fuel margins, the marketing segment could report a weak set of numbers. And the gross marketing margins earned by these oil marketing companies on sale of every liter of petrol averaged around 1.5 rupees per liter. That is nearly 53% lower compared to last quarter, while for diesel, it averaged around 1.9 9 rupees per litre. That is a drop of around 44% compared to last quarter. So this will keep the marketing segment weak for both the oil marketing companies. Lastly, key things to watch out for would include the management commentary on the current status of the Visakhapatnam refinery expansion project, that is for HPCL, and from BPCL, management commentary on the Kochi refinery expansion plans, and the stabilization of this would be a key thing to watch out for. Along with this, management commentary on the gross refining margins and the marketing margins going forward, and any update on the capital expenditure plans will be a key thing to watch out for in the first quarter earnings from both the oil marketing companies. Now, two other pharma companies, that is Cipla and Lupin, will be reporting its numbers today, and we have Darshan to give us all the details about the same.
Yeah, so basically if you're looking at, let's start with Lupin, it will be a weak quarter. We are seeing a revenue decline of revenue growth of 6% that will come in. Profit will be down 3% and EBITDA will also be down 3%. Now there is increased competition that they're facing as far as some of their US products are concerned. That will dent numbers for them in the US markets. So on a year-on-year basis, we are seeing the US revenues will drop almost 15%, and we are seeing that quarter-on-quarter it will drop by almost 10% over last quarter. As far as some of the key drugs are concerned, there is Megatine, Metagene and Glumetza, which are some of their key drugs, and that are facing a lot of competition. So pricing pressure is clearly not there here. As far as margins are concerned, they launched one of the key drugs, Sovolic and Solosec, sorry, and that is facing a lot of competition there, and a lot of marketing and sales expenses are there. So that is something that will dent margins for the company. India business will grow almost 15 to 20% on a favorable base, and price cuts in Japan will dent the earnings for the company. As far as Cipla is concerned, we are seeing revenues up 14%, we are seeing profits down 6%, and EBITDA growth by almost 19%. As compared to as opposed to what Lupin did, they have a large chunk in the US market. Cipla's base is low, so they will be able to grow the US business. So market share gain in Pulmicort as well as some of the other key drugs that will aid the US revenue. So we are seeing an 8 to 10% growth that will come in as far as the US markets are concerned. India growth will be probably 25% on a low base, and that is helping them. And the South African business is expected to grow by almost 10% on the back of the South African rand appreciation that is there. That will help Cipla this time around.
The IPO of CreditAccess Grameen opens today. Now the IPO issue price has been fixed at, the price band has been fixed at 418 to 422. Now this is a total issue of about 1131 crores, out of which the offer for sale is 501 crores. So this will provide a partial exit to the promoters. On the other hand, the company will be raising 630 crores via fresh issue of shares, and that will be used to augment its capital base. Now, if you look at the promoter shareholding after the IPO, it will come down to 80.3% from the previous almost 99% that they held in the company. Now, this is a microfinance company which mainly lends to women in rural areas based on a joint lending group or JLG model. They're present in 132 states, districts across 8 states, and they have a customer base of 18.5 lakhs. But despite being present in 8 states, if you look at their geographic presence, it's largely 2 states, Karnataka and Maharashtra, which contribute to as much as 85% of the company's AUM, and hence is exposed to a very high geographical risk. That apart, if you look at the company's business profile, as much as 86% of its loans are income generating loans, and then they lend also for home improvement, which forms about 10% of their portfolio. Now, after this, let's look at how the company fares in terms of financials. If you look at the AUM growth or the loan book growth over FY14 to FY18, it grew at a CAGR of 57%, and net profit growth was also extremely strong at 65.5% over the same period. So if you look at the AUMs, they have risen to nearly 5,000 crores. Now that's the loan book size of the company. Even if you look at the asset quality picture, the gross NPA ratio had been maintained at sub 0.1% till FY17, but it shot up to nearly 2% in FY18 in the year after demonetization. This is one thing that you need to watch out for. But overall, how does it fare in terms of its valuation in comparison to peers? Well, on a post-issue diluted basis at the upper price band, the issue would be priced at 2.9 times FY18 price to book value, which is lower than Bharat Financial, which trades at 5.1 times, but that's largely because Bharat Financial is a bigger player and they enjoy much higher return ratios. Saturn Credit Care, which is of a comparable size as CreditAccess Grameen, trades at about 1.7 times. So overall, what our analysts recommended, well, they're divided on the issue. You have the likes of Antique and MK, which have recommended an avoid on the issue. The reasons that Antique isn't bullish on the issue is because of the geographic concentration, and they believe that the inability of the company to offer loans beyond plain vanilla JLG could raise a question in terms of their long-term competitive advantage, especially in a scenario where the mutual fund, the microfinance industry is changing. When it comes to MKs, they believe that the valuations do not justify the business risk and the ROEs. SMC Global has a subscribe rating because while they do believe that the ROEs are suboptimal, they believe that this is inherently captured in the valuation already. And finally, you have Prabhudas Leeladhar, which has given a subscribe rating. They say that while listing gains should stand limited, at least for long-term investors, this would be a good play.
Well, on to some more stocks to watch based on the delivery buying and selling as of yesterday. The first stock on the list would be Motherson Sumi. Now, that was down about 3% in trade and saw delivery selling of nearly 140 crores. The delivery volume surged about 127% as compared to its 5-day average, and the total volume surged nearly 3 times as compared to its 5-day average. Second stock to watch out for, Adani Ports. Now, that was down about 6.5% yesterday and saw delivery selling of 66 crores. The delivery volume managed to surge just about 78% as compared to its 5-day average, while the total volume surged about 155% as compared to its 5-day average. Last and final stock, Arvind. Now, that was down about 3.8% in trade and saw delivery selling of nearly 90 crores. The delivery volume surged about 50% as the total volume surged about 1/3 as compared to its 5-day average.
Well, there's clearly lots to talk about over the course of the day. You'll find all of that and more on the website bloombergquint.com. In fact, all the live market action over the course of the day and the earnings that you have to look forward to on bloombergquint.com. Several stories that are currently up as well. Here are just a couple of them. The Union government has appointed S. Gurumurthy as part-time non-official director on the Central Board of the Reserve Bank of India. Satish Kashinath Marathe has also been appointed as a part-time non-official director on the board of the Central Bank. The Civil Aviation Ministry is in discussions with the Finance Ministry for an 11,000 crore rupee bailout package for the ailing Air India, sources have told PTI. The discussions come against the backdrop of a failed effort to privatize the loss-making national carrier, which continues to grapple with financial problems. The government doubled import duty on as many as 328 textile products to 20% to boost local manufacturing in a second such increase in 2 months, according to a notification tabled by Minister of State for Finance Pon Radhakrishnan in the Lok Sabha. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.